Daily cycles with a weekend update on September the 24th. Here I have my 4-week cycle in orange, and we are in the most bearish phase of this cycle. So will it materialize, or how will it materialize? Is the cycle still working, or could we snap back to the old cycle here in gray? That would give us an earlier low. Anyway, I'm expecting downside next week, but you know, we could pop up and flush down, or we could make some kind of a double low here and try to make a small double low and a bigger double low, but that should fail, and we should make a lower low in October. We see all the two previous down moves had 3 monthly cycles going down, 1, 2, 3, and we are on the second, and I think we will also have a third one on this. So my 7-year cycle, we are in the most bearish phase of it, and the 40-week cycle as well is pointing down, both into around October, November. We have broken this trend line, we have broken the 80-week offset. That also often is bad news, and it is quite similar to the 21-month offset, and as I have shown earlier, when we break this offset, bad things happen. Also, we are at the 42-month average, and breaking below that is often a sign of a hard landing. So we need a sharp reaction up here very soon to save the market, otherwise we could go quite a bit deeper, and that's kind of what I expect. Hourly data, you know, few traders have good trading rules for bear markets. They are so rare, and especially hard landings, so you are used to a set of rules that work in a uptrend, in a bull market. So you might forget that when you look at your charts and your signals, and you know, we are in a different environment now. So but when I look at my wavelets here, I would normally say here, oh, this looks like a buying setup here very soon. But it's quite similar if we go back a couple of weeks. It's rather similar to this point where we are now. Yeah, we could. This might not be a buying setup yet. We, you know, in this steep downtrend, you should always wait for some kind of a bottom formation, a double low or something, before you jump in. So yeah, I could see us from these signals. I could either see us having an upswing and then down, so we could go up for 3 days, 2-3 days, and then down for 3-4 days. But I could also see us going straight down on Monday, and needing all this week for some kind of a sideways bottom formation here. And I could also see us just crash down. So you know, I hate when I say we could go up or we could go down or sideways. Oh, that's the worst thing to say. But you know, my overall cycles, they are pointing down. My 4-week cycle is pointing down, so definitely a downward bias here. I could also look into my 20 and 40-week cycles. So this is my 20-week cycle, and the 40-week cycle is shown by these blue arrows, and this cycle is made from all the data going back to 1950. So it's a fixed cycle. It is the average cycle in this 70-year period and detrended. So this cycle has its good times and bad times, but it always goes back into working. So let's have a look here. Past years, we had a low here, no real low in this part here, and that can happen. The 20-week cycle can disappear, but the 40-week cycle you should see. So we have a low there and here and there, and now it starts to get messy, because this deep low, that shouldn't happen at the 20-week low. That could happen at the 40-week low, but yeah. You could also notice that this low is a little bit late. So after such a low, I would often look for perhaps a late low here. But actually that was quite late, very shifted. Someone would say inverted, but I would say shifted. So we could look for another late low around here. That's also very late. And then we get back in phase here, it seems, and there, and a little bit late here, and back in phase here. And we should look for a low early November, or in the weeks before or after. But going back to the COVID crash, there's another way to look at it. You could say this is a early low, this is a early low, this is a early low, and you should look for an early low, but it actually was spot on. And then you had a small reaction here at the cycle low, call it some kind of echo or something, that should have been the cycle low, but it was much too early after what the market regarded as the cycle or oscillation low. So you get these periods where the market oscillations are out of phase with the cycle, but in this 70-year period, after a while it gets back in phase and locks in until some weird market action makes it out of phase again. So that could happen here, especially around crashes, and you can see if the market get out of phase. But in the period we also have the seasonal variation, all pointing to a low. It's much too early. Making a double low here should be much too early. We should have a lower low. Could be end of October, but it could even be early December. So at last, finally looking at just my scenarios here. These are from what happens after a big bear market rally, and they all point to more downside. Many of them point to around October the 10th. That doesn't quite fit with my cycles, but it could be a short-term low, and we can have a lower low, in November. That could happen. I also have these ones. These are the most similar bear market rallies, so they are measured from the start, and we are in the middle of it here. We could mess around here at this double low before breaking lower. We could break down directly. There are many variations here, but generally we should make a lower low. Yeah, see you.